Chris Hensley is a registered representative of Cambridge Investment Research, Inc., a broker-dealer member of FINRA SIPC, investment advisor representative of Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Houston First Financial Group are not affiliated.
The Houston Midtown chapter of the Society for Financial Awareness presents Money Matters with your host, Christopher Hensley.
Good morning, everybody. You're listening to Money Matters. I'm Chris Hensley. The time is now 11 a.m., and we've got a great show lined up for you today. Now, yesterday we are here right after a huge rain event. What was a tropical storm, then a tropical depression, has really left Houston in a bind. Much of the city up north, Beaumont, underwater. With that, many people have left their cars abandoned, flooded out, and have a problem. Our guest today on the road lending addresses a little understood but substantial problem, providing a way for individuals to overcome transportation barriers so that they can get to work, lead healthier lives, and avoid predatory lenders. So we have a unique guest today, as they are a 501c3, a nonprofit that helps people get into new vehicles. So please stay tuned. Keep listening. As you know, if you are a longtime listener, we always reserve just the first few moments of the show to tell you a little bit about what's going on in the Houston, the Gulf Coast, and even beyond when it comes to financial literacy in those areas, as well as in the entire world, really. And that leads me into my first topic. We have had a couple of changes in Social Security. So this is kind of a biggie, so I'm going to share this with listeners here. Investment News put out an article that about 2020 Social Security COLA expected to be 1.6%. And so that's kind of a big deal, because over the past X number of years, we've seen a cost of living adjustment that has been higher than that. And I'm going to share from the article here. It says it looks like Social Security benefits will increase by about 1.6% in 2020, more than a full percentage point less than the 2.8% cost of living adjustment this year, according to preliminary estimates by the Senior Citizens League, a nonpartisan advocacy group representing more than 1 million retirees. The Social Security Administration will issue its official COLA announcement for 2020 on October 10th, so that's kind of the date that they always give us updates on what it's going to look like for the next year. Following the release of the CPI, or the Consumer Price Index data for September 2019. Now, Social Security benefits increase automatically if the CPIW, which measures price inflation for urban workers, increases in the third quarter, July, August, and September of the current year, over the corresponding third quarter of the previous year. So that's something to have on your radar there. Typically, when we see the average 2.8% cost of living adjustment with Social Security, sometimes they will raise Medicare premiums almost at the same, so it's almost like a wash. So even though Social Security recipients are getting a raise, if you raise the Medicare premium, it's almost a wash. So this is a different situation than that. This is even less. I think it's been 10 years since we haven't seen that average. From a planning perspective, when I help clients, or we sit down with people who are trying to do Social Security coordination for spouses and that sort of thing, to be able to kind of rely on a number, we know it's an estimate, it's not something that's in stone, but that 2.8 has been something that we could pretty consistently rely on. So for it to go down to 1.6%, it's something that we all want to have on our radar, especially if you're trying to budget and you're living on a fixed income and you are on Social Security. With that, let me also update you a little bit about Houston Money Week. We are in the planning stages. We had our first partners meeting this month. In fact, Lucretia, who is our guest on the show and will be joining us very, very shortly, she is also part of Houston Money Week, and so that's where she was telling us a little bit about on-the-road lending, and it sounded like a perfect topic for the show. So we'll have her on here in just a bit to tell us more about that. But that's one of the things we do when we have the Houston Money Week meetings, is that there's networking. So you're out there meeting people who are also involved in the community, who are doing things for financial literacy. And we're just now getting started, and then this is going to take place in 2020 of April. So Houston Money Week is Houston's representation of Financial Literacy Month. We've been doing this for several years. Encourage people who are interested in either helping out to attend one of our partners meetings, or if you are an organization, a company, a school, a business, a religious organization, really anywhere that if you would like to become involved and have one of our speakers out to talk, you can participate in that way as well in April of 2020. I would point you to the website. It's www.houstonmoneyweek.org, and it is live and it is updated. And so we've got rolling out new stuff each and every month from all of our nonprofit partners and our for-profit partners and the schools and universities. So it is a dynamic website that changes and updates with what's going on at that time. With that, let me be quiet. Let me get Lucretia on the line here, and we'll maximize the amount of time that we have with her. Lucretia, are you there?
Yes. Hello, Chris.
Hello. Good morning. How are you doing?
I am doing great. Staying dry.
There you go. So I know for Houstonians, now you live in Houston, but you travel back and forth between Dallas and Houston, and even more. Is that right?
Yes, I actually cover all of South Texas. I'm in Dallas because this is our regional our headquarters actually is here in Dallas, and I've been here all week here, and I was supposed to be back yesterday, but the rain kind of hindered me, so yes. I'm still in Dallas.
So that's a thing. When you were texting me yesterday, I was stuck in a parking lot, and so I would say if you were in Dallas, stay, because Houston was pretty bad. We got hit with the floodwaters, and yesterday was really crazy. Well, so I know you because you're one of the partners with Houston Money Week. But you are with On the Road Lending, which when I say that, people think of a loan company, but this is different, and that's kind of what pointed my eyes to it. Is that tell us what is On the Road Lending?
On the Road Lending, as you said, is a 501c3, and it was actually started 6 years ago here in Dallas by our CEO and founder, Michelle Corson. And she started On the Road Lending because she saw a correlation between unemployment and a lack of reliable transportation. So seeing that need, On the Road Lending was born, and it was created to help individuals, families, veterans, seniors, first-time buyers, people with credit challenges, immigrants, refugees, just everybody who were having issues getting into reliable and affordable transportation to help them to become independent car owners. And that's what we are about. And what makes us unique is that we're not basing it on their credit score. You know, when you go into an ideal dealership, the average dealership, the first thing they want to do is pull your credit to see how much interest the charge is. And so that's where we get into predatory lending. So we're here to give people another choice. We're here to let them know that you don't have to pay 18, 19, 27% interest just because life has happened to you. A lot of times people don't have less than perfect credit because they just want it to be that way. It's because life has happened. And so Michelle understands that. And so this company was created to give people another option. That's what we are about, helping people to get their lives back.
I love that. I love that. And we are actually, we're coming up to some of the anniversary dates for some of the tropical storms and hurricanes that we've had. And I know here in the Gulf Coast, anytime we have a hurricane or major flooding, I mean, we just have many cars that, they get flooded out, people lose their car, they're totaled out. But then if you try to buy a car it's the worry that they have salvaged these, and you've got an inventory full of cars that have been previously flooded out. Maybe there's electrical issues and that sort of thing. How do you guys address that?
Well, we actually started in 2017 in Houston. United Way invited us to come in right after Harvey. I think it was September 13th, 2017. Wow. Michelle Corson did a presentation at a United Way Thrive meeting introducing the on-the-road lending mobility program. And actually, they had created, before Harvey, a disaster mobility program to help people, just like what Imelda just did to Houston, to get into reliable and affordable transportation. And what we don't do is buy vehicles from Houston. When Harvey came,
yes,
we either shipped the vehicle to the clients or we flew the clients here through Southwest Airlines to actually pick up the vehicles here in Dallas. So, like now, with all those cars, I think I heard this morning, there are over 200 cars that were just floating from the neighborhoods, and not to mention the cars that were stranded on the highway. So you know it's over 200 cars that have gone underwater. So we would not dare buy a vehicle in Houston at this time because we don't know which car has been flooded and which car has not. So our vehicle specialists will actually use dealers who we have partners here with in the communities here in Dallas. We have a lot of dealerships that we work with already, so people can be assured that they are riding in a vehicle that has not been flooded.
I love it, because that's a concern with anybody across the board. If your car has been flooded and you're looking for a new car, it takes a long time for those cars to get out of the inventory. So the idea that you're picking from other cities is huge. I love that. As a listener, that people have just gone through this. What are some of the criteria that you look for when you guys work with somebody?
Well, because we are not basing our loans on your credit score, it's actually based on their cash flow, which is their budget. How much car can you afford? Can you afford a vehicle? So basically, they have to be 21 years or older, and that's really because of the cost of insurance. They have to reside in Texas, Alabama, Mississippi, or Georgia, which is the area that we're covering presently. They have to have a valid driver's license. And income-wise, they have to have a minimum of $1,500 a month after taxes household income, with at least $500 available to cover a car note, insurance, and gas. So those are the minimum requirements that we're looking at right now.
I love it, because that brings a lot more people into the criteria for purchasing the cars. And then the interest rates are, you guys aren't charging the rates that like a predatory lender would charge if their score was low, the low credit scores.
Right. We have one interest rate, which is non-negotiable. It is 9.75% across the board for anyone that applies. So that means that if you can get less than that, then you're not our target audience.
Right.
We're targeting low to moderate income families and individuals who have credit issues or no credit. And so everyone gets the same interest rate. And it's a great rate because if you had a score of 450 and you went into a dealership, I guarantee you're not going to walk out with a 9.75 interest rate. If anything, it's going to be double that. So that is our interest rate for everybody, and we have a 5-year term. And they're welcome to pay it off anytime without any prepayment penalties. So we invite our clients to come in and actually let their credit change, let their lives change, the quality of their lives. And we're not looking to hold on to our clients to their do us part. We want their credit to improve. So once they get their credit improved, because we are reporting their credit to Experian and Equifax, so once they get their scores up, they're welcome to refi with a lender who would offer them a lower rate. That is what we want. We want them to move forward. So they don't have to worry about we're going to hold them to us until they pay out the loan. No, you are welcome to refi and get a lower rate at any point in the loan that your credit has improved.
So for people who are familiar with United Way and Thrive. When you mentioned that you guys base it on the cash flow, that they have some free money in their budget, or that they're just that's not an easy thing to find out. But that reminds me of our nonprofit partners that are doing financial counseling, and it's not like they're just giving them the great rates. They're actually making sure that they can afford it, and that they're heading in a positive direction. Can you tell us a little bit about that process of how do you go through that?
Yes, when they apply, we do require a copy of their driver's license, 2 bank statements, and 2 proofs of income, or if they're receiving Social Security or retirement or something, we'll need those award letters. But all of our clients have to work with the financial coach for the length of the loan. And when they work with that financial coach, they actually go through with the coach a budget, because they have to tell the budget to the coach. The coach works with them through that. That's why we want to look at the bank statements to see what are your spending habits. We look at your credit report just to see what is your financial situation, what is it that you have already incurred, what are we looking at. And so we're not going to hold it against you, but we do want to see what it looks like. So we work with you on your budget. We find out how much you're spending on food, how much you're spending on rent. We want to make sure that you can truly afford this vehicle. That is the whole premise behind this, is making sure that you do have some disposable income coming in. You're not looking for it, but you have it. And, of course, because our rate is as low as it is at our car notes, we try very hard to keep them between $250 and $350. And because of that, a lot of people are like, I can make it work. I can make it work. We don't want you to make it work, because we're interested in improving your financial picture. So in order for that to happen, you have to show us that you already have disposable income, a savings, hopefully, that you are able to afford a new vehicle. So we're working with you on your budget. It's very in-depth. That's why you can't apply today and drive off today. That is not our program. We may work with you a few weeks just to make sure that we're getting the information that we need and that you can truly afford this vehicle. That's what it's all about.
And this is also part of impact investment funds.
Yes.
Can you tell me a little bit about that?
Well, we are, On the Road Lending itself is a nonprofit, and we have a sister company that is the Impact Investment Fund. We are a CDFI, Community Development Financial Institution, where banks use their CRA dollars, and philanthropists and anyone, even you and I, can invest in it. And what happens is that fund actually purchases the vehicles for the nonprofit, and the nonprofit carries the note. So we don't sell our clients' notes to other entities. We actually carry the note, and we have a loan servicing department that services the loans. So that entity helps us do what we need to do. So what happens is when someone pays their note, that money goes back into the loan fund and enables us to be able to give out more loans. The money is just recycling itself. That's how it works.
I love it, because I think that's one of the biggest things that makes you guys different and unique, and that's kind of what got my attention, is that this isn't just a lending company. This is
right.
This is involved in getting people back to work if they don't have a car,
right.
and getting them on the right track. And for us partners that work with United Way, we know that the financial coaching, it really works, and so to have that part of it, that's fantastic. What do you offer new cars? Tell me a little bit about that.
No, we don't offer new cars. You know, Chris, once you get a new car and you drive that car off the lot, it has lost its value. Am I right?
That's true.
We understand that. So our cars are usually 2 to 3 years old, less than 40,000 miles. All of our vehicles are certified, and we work gap insurance into every loan. So when we purchase a loan, because we actually advocate for the cost of the vehicle, our clients don't have to go to the dealer and worry about them padding on $2,000 or $3,000. We won't do that. The dealers that we work with understand that we are a nonprofit, so they're not making a bunch of money off of us. They're just moving merchandise is what they're doing. So they're helping us to accomplish our goal. So we're not going to pay $2,000 and $3,000 upcharges on these vehicles. So we look out for our clients. We make sure that they're not paying over the cost of that vehicle.
I love it. The idea that I could do a whole show just on the fact that as soon as you drive a car off the lot, it is a depreciating asset. And too many people think, that they're paying a car note that's almost as high as the mortgage or the rent. And it's not an asset,
No.
or it's a depreciating asset. So I love that. I love that that they're really looking at the true value of the car. I'm big advocate for used cars. You let somebody else pay for the new car, not us.
Hello.
So now for listeners, this is super important for Houstonians because we're in that situation right now. Where would they go to find out more?
Well, they can actually go to our website, ontheroadlending.org, and the application is so simple. Like anybody can fill it out. Just fill out that basic information. Once they complete it, they will receive a email from us welcoming them to the program. And then once they get in all their documentation, and Chris, this is the place where most people get hung up is because we can't do anything. We don't know anything about you. So I need your paperwork.
Right.
We need the driver's license. We need those bank statements. We need your proof of income because that's where the party starts. So I encourage the listeners, if they are hopefully interested in seeking out a vehicle through us, get that information in. What's great about our program is you don't have to go to an office to fill out paperwork. We're paperless. Hey, we're paperless. So you can go online, fill out everything. You'll receive an email. Everything is done remotely. Our headquarters is here in Dallas. I work in Houston, all of South Texas. Then we have 3 people up in New England, and then we have 2 people up in Atlanta. So we work remotely. So our clients can do it from their kitchen table. If they want to do it at midnight in the bed, they can fill out the application. Everything is online, and they can upload that information right there real quickly. And once they do that, they will definitely hear from one of our coaches who will begin to work with them on their budget to see if they're qualified, if their income will qualify them to be a part of our program, because it is income-based. It definitely is income-based. And also, that's why I don't forget, we also have a financial literacy component to the program. All of our clients are required to take a 4-hour financial class. It's online. The coach will send them the link, and they have to take that unless they have participated in a financial program through one of our partners. And so that's where Thrive comes in. And even if they're not a part of Thrive, but they have a program, as long as they can tell us who they took it through, and as long as it wasn't 5 years ago, we're good. So we want to make sure that we educate our clients as well.
Absolutely, and I'm familiar with the financial literacy partners, but because you guys are, so for listeners, you are a nonprofit. Who are some of the partners that you work with?
We work with Interstate Batteries is one of our partners, J.P. Morgan, Chase, and yes, Goldman Sachs. Yay! is one of our partners. So, but just to name a few, those are a few of our partners that we're working with. BBVA, yes. I mean, we have a lot of partners out there.
I love it. I love it. We touched upon the disaster mobility program earlier, but is there anything else you wanted to tell us about that?
Well, the disaster mobility program, what it does, people who have been affected, just like the flooding that took place in Harvey and now in Imelda, what it does, it kind of helps to push them through a little faster because they are in a need, really need for a vehicle because of the disaster of losing their vehicle. So we have a down payment assistance program for those people because the down payment, everyone needs to have a down payment, which is we just require, I can't tell you what that will be, but I can say as long as you have $1,200, you won't have to have more than that unless you just choose to. It depends on the vehicle as what the tax, title, and license will be.
Right.
So we can help those people who have been affected by helping them with the down payment. At this point, that's what we're doing for those who were affected by Harvey.
I love that. So that's an additional way that you can help is the down payment assistance. And I understand what you're saying is that you can't really say specifically outside of this what the down payment would be because it's kind of variable depending on what car it is. There's the taxes and everything. There's a lot of things that go into it when you're trying to figure that out. So it really kind of comes down to the individual car and the situation. So.
Right. And I said Harvey, but I meant any disaster person in our region, they can apply. So Imelda counts as well.
Yeah. Unfortunately, there's a long list of those now. I'm trying to keep it straight because it used to be it was every 10 years. Now it's getting to be every year. So
I know. What that global warming, that's what's happening.
Yes, we can't keep up with it. Well, so we've got just about 5 minutes left in the show, and I would hate to miss the opportunity to talk more about Houston Money Week. So I know that you have been a partner of Houston Money Week for a while. Can you tell us a little bit about your experience as a partner with Houston Money Week?
Yes, the Houston Money Week is a great avenue of partnering with other people with like minds of wanting to help people to find financial sustainability. So I've been a part of it, I can't know, probably since its inception or right after its inception. And so I've been here with On the Road Lending for a year now, and I brought us right into that, just kept it going. And so I partnered with other agencies presenting our program to their clients and teaching them about financial literacy as well. So whatever we can do to help other agencies or get their clients into reliable and affordable transportation, that's what we're doing, along with teaching them how to buy a car, what to look out for when buying a car. We have all those things incorporated into what we teach our clients. So it's just a life lesson, helping people to become financially stable. And having the right vehicle is a part of that, because if you're spending more money on getting it fixed than you are driving, that's a problem. So you have to know how to purchase a vehicle as well. And we understand that here at On the Road Lending.
I love it. And the thing is that I always say we have so many resources in Houston, in Texas, in this region. And it's if everybody knew what we had, we could solve a lot of problems. Houston Money Week, just how this podcast came about, was just during the networking part of the Houston Money Week meeting. And it's literally, we have so many people doing different things. It's just matching the right people with the right what's going on and letting people know more about it. And so like this, I think this is a great program. And the timing couldn't be better to get the message out for people to know about it, because it's very real. This is going on in people's life today, right now. Well, we've got just a few more minutes before the end of the show. Is there anything I forgot to ask you that you'd like to let listeners know?
Just to let them know that we are here for them, and that to understand that we do not base our loans on their credit score. That is key, okay? That is the key to what makes us really stand out from other agencies. We are just about putting people in the right vehicle, and also letting them know that we try very hard to put them in vehicles, that's the vehicle that they want, but also they need to understand that our concern is making sure that they need to keep in mind that their budget is going to determine what vehicle they ultimately end up with, but that is still a good thing. We want people to like their cars, love their cars, but sometimes your budget may not be that yellow Camaro with the sun-roof rooftop and the mag wheels. I just want to make that plain, okay?
There you go.
I can make sure that it will be a lot reliable and it will be affordable.
I love it. Lucretia, thank you so much for being on the show. Have a safe journey back to Houston, and have a great weekend.
Thanks for having me, Chris.
Absolutely. And you have been listening to KPFT Houston.
Thanks for listening to today's episode of Money Matters Podcast. If you enjoyed the show, visit us on the web at www.moneymatterspodcast.com. drop us a line on SpeakPipe on the right-hand corner. It will receive any voicemails, questions, thoughts, concerns that you have about the show. In addition to this, we recently launched a Patreon campaign. Click on the Donate Now tab to hit the tip jar and find out what Patreon's campaign is all about.